Hello, I'm Steven, the calculator guy, and given the current market conditions, I'm just going to keep doing things that are delta neutral, pseudo-delta neutral, or market neutral, effectively meaning that regardless of where the market goes, we're still making money and not taking losses. Now that means we're not exposed to the uptrends either. However, we've been in a bear market since November, and I think it's a relatively prudent bet to continue to assume we're going to be bearish until we have clear indications of turning the corner. So let's just jump into it. GMX is one of the protocols where I think that you can do some pretty interesting stuff that is market neutral if you know how to do it. And it's not immediately clear, so that's sort of why I'm here. Now, I will say I got this sort of strategy by talking to Umami. They're going to try to automate this. They haven't done it yet, but when they do, if they do it successfully, I'll probably talk about that. But I'm going to show you how to do it manually, because it's not super difficult. It's just the rebalancing that takes a little bit of effort. So let's dive right in, right? GMX is a platform where you can leverage blue chips effectively, short, longs, those kind of perpetuals. So up to 30x, so you can do a 30x leverage on Bitcoin in either direction, long or short. If you want to do that, and like the fees, liquidation fees, the trading fees, swap fees, get funneled into people who are holding GLP. GLP is an index of stablecoins and then blue chips. So we have 15% BTC, 15-ish% AVAX, and then 20-ish% Ethereum. Roughly, and that sort of moves around, and then 50% roughly is going to be in USDC. So you can see right now it's a little bit less than 50%, like 47%, but those are the ratios that it tends to stay within. And so those were sort of like the starting assumptions. Now, as those change back and forth, of course, the USDC, like if those go down, which happened today and yesterday and the day before that, then the USDC will buy into it because it's impermanent loss with a 4-ish assets, because you have USDC and USDCE. Doesn't really matter. It's an index of those tokens, and it'll permanent loss itself around those ratios, more or less. Okay, so if you want to buy this and make that really cool 30-ish%, 34% APR, 34% APR, right? So if you're compounding that, you're going to get like 40%. That's really good if you can do that on market neutral. Now, if you're not market neutral, well, it'll keep going down, right? I bought this at like $1.07. Now it's at $1. That's around 6.8% decrease in value. So I built a calculator to make it market neutral. Now, I know this calculator seems a bit busy. Let's increase its size a bit so you guys can see it. And we'll go through each part of it. It's not my cleanest or most attractive looking calculator, but it gets the job done. And once you understand it, which probably will take a while considering how busy it is, I think it's pretty useful. So the green stuff, as always, is the stuff that you edit. The blue stuff is the stuff you don't edit. Purple stuff is just like the important stuff that you also don't edit. So green stuff, the GLP interest rate we just saw from over here, that's 34%, right? 34%. Then the GLP bot, this is just how much money you invested in GLP. The borrow fee, you'll get that from down here when, oh, you can't see that. Down here when you're borrowing. Not when you're borrowing. I mean, kind of when you're borrowing, yeah. But when you're leveraging, when you're shorting, this is the fee you pay per hour. So that is compound interest. Do be mindful of that. That's how they get you. Okay, so here we go. Borrow fee, days out. This is just how far in the future you want to look with this investment. And then leverage. This is how much leverage you want to use. Now, I recommend using smaller leverage because of liquidation, right? At 3x leverage, given my estimated, I don't know what Ethereum and Bitcoin and AVAX actually are at. I just sort of estimated with these. At these prices here, you would get liquidated at these prices over here, right? These are the short. Actually, let me just take these, bring them down here. Look at that, much nicer looking calculator, and I'll put a box around it. Okay. Because you probably want to know that. So those are the liquidation prices, right? Effectively, with leverage, your liquidation is 1 divided by your leverage as an increase in value. So 1 divided by 3 is 33, and 0.33 repeating, so it's a 33% increase. At a 33% increase, you would get liquidated for Ethereum, Bitcoin, than AVAX, right? For any one of those assets, you'd get liquidated. Now, I think that's fair. I don't foresee a 33% increase in any of these assets in a day, and I'm checking my position every day, so totally fine with me. If you want less risk, it's just going to require more initial capital. You can see, like, if I do watch these prices, right? This is the short value required for each of these. If I do 2x leverage, now I require more initial capital to get my investment, right? So that's one thing to consider. And my profit is going to go down a little bit lower because because my short investment's not making any money. It's just hedging against it's hedging in order to make delta neutrality. So I'm using 3 leverage. That's where I feel safe. 4, if that's what you want to do, go for it, but that requires a 25% price fluctuation, and I think AVAX might see a 25% price fluctuation upwards on a random day in the next few weeks. You know, I'm not bullish on AVAX, I'm just saying it's a really volatile asset. It could happen. So anyways, that's what you'll see there. A short spot, it just tells you how much shorts you would have to buy to be market neutral. Total initial is just the value that you purchased in GLP plus the value of shorts bought. And then the future stuff all comes from future prices. So I'm also going to circle back because that's a pretty important one. Actually, let me go down to 125%, just so we can see everything here. So here, we're looking at the ratios, right? These ratios I pulled straight from this, right? I just got these ratios, pulled them straight from there. There's going to be some impermanent loss, but this accounts for that. And so investment breakdown, this is just like how much of that $1,000 goes towards each thing in that GLP index. So you see you have $210 roughly in Ethereum, $155 roughly in Bitcoin, $161 roughly in AVAX. And then, so these are the short values required. We just talked about that. In order to hedge your position and make it delta neutral, this is how much money you need, right? If you have $210 on Ethereum, you need a third of that because it moves up times 3 for every $1 Ethereum goes down. Right, so if Ethereum goes down $1 and your Ethereum is now worth $209, well, your short is going to go up to $73. Yeah, that's not exactly right. If you lose $1 in your investment, now, gosh, how do I explain this properly? If this goes down by $3, this will go up by $3, even though it's a third of the size. There we go. That's what I'm trying to say. Because this is 3x leverage. Okay, so you need a third, effectively, is what I'm saying. And if you have 1 leverage, you'll literally need the same amount, because then it goes up and down at the exact same ratio. But you won't get liquidated. So I don't know why there's liquidation prices. There shouldn't be. Oh, I guess, yeah, the liquidation price would be if it goes to 0. Or, no, sorry, if it 2x's. Okay, so short value in the future, right? This comes from everything else is just determined by these future prices, which is kind of cool, right? So in the future, let's say Ethereum goes to 2,300, Bitcoin goes to 35,000, AVAX goes to $55. I mean, it's going there right now, right? So you can see the percent change, the effect on GLP, right? There's a negative 3.8% effect on GLP. GLP is going to decrease by that much, and you can sort of see that. Future GLP value, $961. That is that sort of 3.86% negative decrease. Future value in terms of, yeah, you can see that right here. Future value in terms of your investment right here. Future ratios, right? So in order to rebalance and be both to maintain its 100%ness, this is where you would be, right? So these would be the future values. Now, I don't know if the people over at GMX rebalance this manually, or if they just let it do its thing. But if they let it do its thing, this is exactly what it would be at. And here's the change in your shorts, right? Your shorts would increase by $7, $8, and $13. Effectively, I guess I could do some there. And make that dollars. And so you made $38 in shorts, which is great, because you lost $38 in GLP. So that's why you're neutral. Now, where do you get your money from, right? If your shorts are going up at the same rate, your GLP is going down, all of your money is coming from your interest. So, percent interest on shorts. This is, oh yeah, so this is 365 days out, right? With that compound interest. Let's do something more realistic. Let's do 30 days out. Let's say this happens in a month, right? You would have paid 1.45% interest on your shorts because of that interest rate that you see down here, but you would have made interest earned, you would have made $27. So you would have paid $3.10 over here. That's that 1.45% interest on your shorts, but you would have made $27 in interest from your GLP. And that's not including compounding. If you're compounding, you're going to be making more of that. So the interest on GLP is APR. It's a really okay, I don't want to say any mean words. It's a really complex system of reinvestment, and it takes a lot of AVAX gas. So maybe you just take the APR, you know, like you would on some Ethereum plays, and you don't compound it very frequently. But there you go. So your profit loss in 1 month is 1.78%. Not terrible, right? In this market, not terrible. Pretty good actually. That's a yearly. Well, let's do yearly. Or just annualized equals this times 365 divided by days out, and then turn that into a percent. 21.65% annualized. That's better than Anchor, right? So that's what we're aiming for. My goal is always to do better than Anchor. So we did it. Hopefully this was an interesting or useful video for you guys. It was fun to make this calculator. I know maybe not my most intuitive to use calculator. What color should this be? Purple? But it was a lot of fun. So one of the other things that you should know is this over here, the action. In order to keep your shorts balanced due to the impermanent loss of the GLP, you need to manage your shorts, right? So to make your shorts neutral with your longs in GLP, this tells you what to do. So you would sell $1 worth of Ethereum and AVAX, maybe just keep them in, but then you have to buy $5 worth of Bitcoin to keep those. So right, it's negative $3 for rebalancing. That's the rebalancing costs. So that is taken into account in this calculation. And yeah, that's all I got, guys. Hopefully you enjoyed this video. If you want to talk about these things, the Discord is the place to be. We talk in the free part of the Discord too, but most of the big brain discussions being had, and who I'm getting many of these ideas from, is all in the premium Discord. So that's it. Thank you all so much for watching. I'm going to leave this calculator in the Patreon for now, because I'm sure there are some bugs in it, and generally those guys will point out the bugs pretty early when we get those hashed out. So yeah, pretty cool. I'm not going to go into GLP rewards, how those function, how they work, or GMX rewards, simply because the system itself is not immediately intuitive to me, and I don't want to get anything wrong. So I know you can compound, and when you click compound, you can do any number of actions here, and you can also get rewards while vesting. And so in a bid to not get anything wrong, I'm just going to stick with the APR and not assume any APYs, just to make things even easier, right? And even with doing that, I'm still getting an annualized percentage of 21.65%. If you want to school me on exactly how the GLP rewards mechanisms work in a very clear to understand language, please do so in the comments below. I will appreciate it immensely for when I do someday redo my GLP or GMX video. Okay, thank you all so much for watching. Actually, you know what? I got 2 more minutes before I'm at 15 minutes, which is like the general attention span of a person. In this market, we want to be pseudo delta neutral, market neutral, and things like that. So I've also made a rebalancing calculator for protocols like Francium or Frankium, or I don't want to use Tulip right now because I think they're a little bit misleading with their APRs. So let's just say Frankium, right? If you want to open up a Solana USD position in Frankium with like 130% APY, you have to manually rebalance that to keep it market neutral. And I built a calculator for that. So I am going to be going over that calculator in a while. Of course, if you want access to it, you can join the Patreon. I always let them test my calculators early before I release them to everyone else. But that's another thing to be thinking about, right? It's more work. It's not really passive because you are looking at these investments on a daily or bi-daily basis and rebalancing them. And every time you rebalance, you are technically realizing some impermanent loss. but it's a very, very small amount with the small fluctuations. And 130% APY is going to, I hate to act like I know the future, but it will generally beat the impermanent loss with pseudo delta neutral rebalancing. So there's just so many ways you can continue to make money in this market. I know my personal portfolio looks bad just because of Beanstalk, but really, there's no reason to be exposed to the market right now. You don't have to be making money. So that's it. That's all I got for you. Thank you so much. Have a wonderful and fantastic rest of your day.